Okay, hello again. Let's finish up our discussion, our 10 minutes to wrap things up. And I see for the most part, consensus is reading the required first, with one exception, Melanie, which I think I would probably potentially be more in the Melanie camp. Um, for required scenario, then required again. Uh, But yeah, but I get either option. Doesn't I think it doesn't really make sort of massive difference. Or maybe it does because it ultimately depends on your preference and what makes you sort of what sets you up better for success. So I think that's probably the thing that you should focus on the most. Um, of course, time, right? I agree. There isn't a lot of time. So for those that are more, I don't want to use the word slower, but more sort of you're more detailed in the way that you read, so it takes you a little bit longer. Then it makes sense that you don't have the time to do the back and forth, right? So I think just play to your strengths, and whichever way it feels more comfortable is definitely the way you should go about doing it. But I wouldn't necessarily say that I've got an answer as to what's without a doubt the best approach. I think the best approach is the one that is best for you. Okay, now let's jump right into the scenario and then kick things off. See how much we can discuss before the hour is up. So Piper Limited operates a number of facilities for the elderly across South Africa. Piper's facilities include the following. So we've got secure retirement villages where residents live independently and care for themselves. And we've got frail care facilities where services include 24-hour nursing and personalized medical care. So at this point, I would have been asking you all exactly what you've been thinking, etc., 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 but I don't have time. So I'll do some of the legwork in the initial phases, and then I'll pass it on to you when you get into the meat of the thesis. So as always, and it's important to always keep an integrated and keep an integrated thinking as you sort of work through all of these particular sort of questions. But at least at this point in the program, we're sort of speaking to and working with um, uh, accounting specifically. So we're going to focus on accounting, right? It makes sense, right? So as you think through the scenario, but I think at the point where it at the point where it flips into the integrated world in this program, it's very important that we always think about the multidisciplinary approach when it comes to reading through these fact patterns. But what I always try to mention from an accounting perspective that's important for you to understand off the bat is what the primary business of the entity is, right? So the primary business of an entity drives a lot of the accounting, right? Whether it's revenue, leases, financial instruments, presentation, disclosure, what standards you think will become relevant. So there's a lot that you can frame your mind with when you think about the primary operations. Particularly in this case, if you think about these facilities that they operate, you can immediately start wondering whether or not, so how do we make money? So in other words, the question you're trying to, how does Piper make money? That's essentially the very simple question you're trying to answer by reading the first couple of sentences. Now, as you can see, I've asked the question there, and critical thinking is all about asking all the right questions, which you would have done in the session with Randani, where I saw a snippet of it, like I said, where he shared some awesome nuggets in terms of how to go about critical thinking and the types of questions you should be asking as you're reading through. Keep that sort of document or those slides very close, because those questions should just become part of your natural approach to critical reading. You just almost become much better at just asking questions as you're reading information and not reading things for face value, right? So the worst thing you can do is reading just to get to the end, right? Wrong, 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 wrong. That'll never be the best approach to reading. You need to read to understand. You need to read. You need to critically read, right? The information that you get. Okay, Piper prides itself that all its facilities offer peaceful, tranquil, secure locations, which are a distinguishing feature of the Piper brand. Now, being told a little bit more about the business, Obviously, the type of stuff that's more relevant for more management, accounting, finance, strategy type considerations, less relevant from an accounting perspective. Unless maybe, I don't know, we throw in like an impairment consideration or something, where something happens to the brand, etc. Right? But yeah, at this point, really nothing pointing us to any sort of concrete or specific accounting issues. Just maybe some of the more contextualizing type information that could become important later. All entities within the Piper Group comply with IFRS and have a 31 December year end. Now, comply with IFRS, you can always expect it to be IFRS, right? It won't be anything else. So that is almost a given at this stage of the game. But good that they're almost like reminding us. But that time, because it's an integrated paper and you don't know what's popping up, at least it can also give you a sense of the direction that the paper potentially is taking, right? So if we're being told that the reporting entity is a VAT vendor, we're being told that they are South Africa tax resident. We're being told that they report under IFRS. We're being told that they're trying to finalize their audit. All of those are kind of like cues in terms of what you should be thinking about or what you can expect from the scenario. So I always talk about developing with a scenario because as what we're trying to do as examiners here, we're trying to build up the scenario, right? So we try, it's like almost think of it like Lego building a house. And the foundations start at the beginning few sentences. So that's why with the foundation, it can be quite a useful exercise to make sure that you're still critically reading to build the scenario with the examiner in terms of how they designed it. So as you can notice here, I'm building, right? I know how the entity makes money. I know that the brand is an important piece of this value creation thesis. And now I'm being told they apply it first. I'm like, okay, cool. Accounting potentially is going to become relevant here. So let's keep developing with this, right? So see how the steps are going logically. 31 December year end. Now, with this year end, right, I want to say one thing that's been okay. Another thing is I'm highlighting here, but highlighting is probably the worst thing that you can do, at least in my opinion, when it comes to critically reading a scenario because ultimately it's too passive in my view, right? And maybe we're all different, and maybe you do still critically read while highlighting and having fancy colors on your script, but I think it's way too passive. So try and can somebody please in the chat share whether or not it's just Violet that can't see anything, or if it's everyone? I imagine if it was everyone that couldn't see, I would have messages by now. But please just confirm for me whether or not you can also see my screen. I'm sharing the Piper paper. Highlighting is too passive. Okay. Okay, cool. Violet. So try jump out and in, or potentially that'll help. So make sure that you're still actively reading. So with the year end, what I want to highlight here is a timeline, right? Timelines are crucial. They're one of those sort of simple things or things that appear simple but have massive impact in terms of your spatial awareness of what's happening, when it's happening, and what needs to be accounted for when, particularly in this particular question. So as you read through this question, I'm sure as I read through this question as well, right? I was like, whoa, there's companies acquiring other companies, there's leases being terminated and others being entered into, there's contracts, there's shares being issued, there's land being acquired and disposed of. There was just so much happening in so many different time frames. Now, getting lost in all of this is a massive shot in the foot, and it can really result in you missing very simple marks, just not having that spatial awareness in terms of when things are happening. So the solution to this is extremely simple. Just a timeline. I don't think there's a single paper that I've ever written where I didn't have a timeline. I mean, granted, we don't do you any favors here at Indonamo, but usually there are like there's some blank spaces. Let me see the bottom here. Okay, maybe here down here, right? There's some space here that you can just put a nice timeline on the paper so that you can just mark off where transactions are happening. What I used to like to do is I used to like frame a timeline from the beginning of the page to the end. But I used to make the beginning of my year like maybe like halfway through so that I can still sort of or maybe my year period rather somewhere in the middle here. So I still have space at the beginning and at the end to mark off transactions that I think nothing that I'm reading are happening outside my financial year. right? It becomes quite crucial for that spatial awareness, because especially in this particular question, there were a lot of dates flying around and a lot of things happening. And if you, like me, when I read this earlier on, was reading, I'm like, whoa, I'm actually a little bit dizzy by all that's happening. A timeline will help you. And all entities within the group apply the same accounting policies. So again, back to the point of developing with the question, this is very clearly another strong trigger that accounting is probably going to be an important theme in this particular question. Piper is currently in the process of finalizing his group financial accounts for the year ended 31 December 2023 or FY23. So now I've got that context of that FY23 in terms of when that period is, and that's on my timeline. And again, we're finalizing group accounts. So that also gives me that context to say like, okay, cool. We're not done yet. We're in the process of finishing. So my role, my involvement in all of this is probably going to be to assist with finishing everything up. Okay, so I'm going to be either be giving information, I'm going to be giving what is done, it's going to be a review, it's going to be a finalized, it's going to be a draft, something, but I'm helping us finalize our accounts for the current year. Okay, so let's read section 2, lease with Keller Limited. So the 1st of Jan 2020, immediately I'm back on my timeline, okay, because this very clearly is a time in my time frame that has happened well before my current financial year. Right, this was the 1st of Jan 2020. This is the 2020 financial year. So I'm on my timeline and I've marked a little line well ahead of the beginning of my year. Piper, which is the group company, entered into an operating lease for the Grudem, a 5-story building. Okay, now I also know what this Grudem is. Finally, it's a 5-story building. Piper entered into the lease with Keller Limited, or Keller. Piper had the intention of opening a new frail care facility on the premises. So they're entering into this lease to open these frail care facilities. The lease term of the lease terms of the lease were as follows. So before I go into the table, I want to pass the baton to you all. What are we all thinking? Or what were you all thinking when you read all of these sort of bullets? What is the examiner telling us? Why is the examiner telling me all of this? Do you have any questions or gaps in terms of issues that could become apparent for you from an accounting perspective, because that's our focus, right? Obviously, you always have the multidisciplinary sort of line of thinking, but it's an accounting session specifically now, so we're focusing on accounting. So what are you extracting from these sentences? What is the key information that you can see here that's very important for us? 1. 2, why are we being told this stuff, this key information? 3, do you have any questions that you need answers to from what you have read? You can answer any one of the 3 questions in any order you want, or one or the other. You don't have to answer all of them. I just want to hear your thoughts. Violet, jump in.
So what I noticed when I read this is obviously like the date that they entered into the contract.
Yeah.
And then I saw the classification of the lease. It's an operating lease.
Uh-huh.
So then I identified the leased asset, which is the Grudem.
Uh-huh.
And then obviously identified who's the lessor and who's the lessee.
Uh-huh.
And then I think they gave us all those lease term, annual rentals measurements. That's
Okay, hold on. Yeah, so I think that comes in the table, right? So I'm just going to put table here.
So
Cool.
possible calculation and journals, and because you asked me why do I think it was given.
Yeah.
Yeah, that's what yeah.
Okay. Agreed. All good stuff. Yeah. So date entered into the contract. Why is that relevant?
The commencement, the date. They're asking about the date.
Yeah, the date. Why is that relevant?
So like for recognition, so that I know like what date to enter it in my books.
Absolutely. So commencement date, we're assuming, and remember we spoke about this earlier, so just to remind everyone, right? We spoke about typically it's the same date that we entered into the contract, the 1st of Jan, if this is the lease. But if information suggests otherwise, we just need to be very careful, right? Because inception date enter into the contract, commencement date, those can be 2 different dates. But at this point, there's nothing here that suggests that to be the case. Okay, lease classification. What is the lease classification? I think someone says Razi there has it as well. So operating lease, agreed. Do we believe this? Because the scenario says it's an operating lease, we're happy, move on, no thinking. Is that our approach? Why do we care that it's an operating or finance lease?
I think we still need to determine if it's true that it's an operating lease and and the reason why we care if it's an operating or finance lease, if we are doing if we are on a perspective of a lessor, it is important to know whether it's an operating lease or a finance lease.
100%. Now, do you see how the critical thinking is coming in, right? So we're doing I'm hoping you guys, guys and ladies, are all picking this up. Where there's a lot of information that we can extract from this. I completely agreed. But then it's at next level, like critical thinking. Why does this matter? Why are we being told this? Who cares? And is this true, right? Because they've said operating lease here, but I mean, I don't see a sentence that says it has been correctly determined to be that, right? So for me, I'm still like, okay, fine, I'll assume it's an operating lease for now. But in the back of my mind, I'm going to be keeping my eye out for information that for me, I'm just like, I don't think this is an operating lease. Why do I care? As mentioned, spot on by Loazide, only from a lessor's perspective. Lessee's perspective, which we are, right? So it was mentioned here are the parties, but it wasn't mentioned who's who in the zoo. So I'm just going to put here Keller's the lessor and then Piper's the lessee, right? And we're obviously Piper. So we're from Piper's perspective, at least is the default. But we don't know what the required is going to come. Okay, we do know, right? We've read the required. And none of the required spoke about Keller's accounting treatment, right? All the required was speaking to Piper's accounting treatment, right? So immediately, actually, it doesn't actually matter whether or not this is an operating lease or not. What matters is whether or not this is actually a lease in the first place. So we're now all busy here connecting all of the dots. I see Kelwazi have all the points in the chat as well. Tanya, investment property, okay, cool. So now we think about investment. Okay, cool. Actually, let's talk about that. Event versus property, and then I say must be recognized possible trigger for investment property versus PPE, questioning finance versus operating. I was confused by is operating while the lease period is more than 12 months, and there's silence about election exemption. Okay, all right. So good point, Noktula, on the operating lease, where the lease period is greater than 12 months, but although we haven't got to the table, but let's just address it now. Yeah, so the operating lease and short-term lease is not the same thing, right? So those are two completely different concepts. Yes, they are accounted for in the same way, right? By straight lining the lease expense for a lessee, but operating lease will be from lessor's perspective. That would be straight lining the lease income. So the mechanics of the accounting are very similar, but they're two very separate and distinct concepts. Okay, so just be wary of that. So by saying operating lease, we're not necessarily saying it's a short-term lease. However, you could then sort of challenge that operating lease sort of assertion by saying, okay, the lease term is quite long for 10 years. What is the economic life of the Grudem, right? It's a building, so probably a very long time, right? So maybe still not a major part of its life, but that's potentially where you could challenge. But overall, everything we're talking about is irrelevant because it's only relevant from a lessor's perspective, and from our required, there's no required that requires us to discuss anything from the lessor's perspective. Everything is from Piper's perspective, or Alcorn, whoever Alcorn is, because we haven't read that yet. Cool. So the investment property. Okay, so now we've got the investment property here. So we've leased in. So we have this right of lease asset, right? That we're then leasing, or rather that we are then making available to retirees. It is retirees, eh? Frail care is people that need frail care. Yeah, I'll just say available to people that require frail care. Okay, so now the question is, how are we accounting for this right of use asset? Is it investment property or is it PPE, right? Absolutely good question, right? Because now, potentially, this agreement here, right? Could this be a sublease, right? Because if it's a sublease, then we need to be thinking about sort of the classification of this right of use asset and also classifying the sublease as operating or finance lease. Or is this agreement for the frail care, providing this frail care service more like a service contract? So we don't actually have a sublease to the people receiving the frail care services, right? So that's also a very valid question to be asking. Okay, so awesome stuff. And then for the table, and I think Violet actually started sort of discussing all of these points in the table. If I recall correctly, Violet mentioned something along the lines of journals or measurement, right? So what we've been given is, so what I used to like to do in my papers, I used to like summarizing this information. So, I mean, I have a little bit of a theory that and as an examiner, if I put this paper together, right, I would have put this paper together and I know where everything is, right? I know where I put that information you require. I know where I put that information, This information belongs to me as an examiner. What I used to like doing when I used to write these papers, I used to say, okay, now I need to make sure that this information actually belongs to me, right? It needs to be mine as a candidate. So how can I do that? And this is why I hated highlighting. I need to put the information where I want to put it, right? I need to know where I have put the information so that when I get to the required and the required says account for this, process journal, calculate that, I know exactly where that information is because I put it there on my script. I don't have to reread paragraphs and paragraphs of information of the examiner's work, wasting my time. So what I used to like to, even if I have a table here, I used to like interpret this information as to how I understand it. Now, like I literally mentioned in the in our session earlier, when I think about a lease from the lessee's perspective, which is how we can be thinking about this lease here, is I immediately think about my PV calculation, right? And I'm thinking about I need to find my PMT, I need to find my I need to find my N, I need to find my FV. Is that it? Yeah, I think that is it. Yeah, cool. And then my lease payment would be 90,000. Sorry, my lease term would be 10 for now. I don't see any sort of renewal options. My I don't have any information on I. My PMT would be 90 per year. And then rental payment is in arrears, okay, per year arrears. And then FB is termination penalty. So I'm going to put a question mark here. Why have I put a question mark on the termination penalty question mark for future value? Or should I actually be including the termination payment as a lease payment in my PV calculation here?
I think it's because it's not certain that we're gonna pay it.
That's absolutely spot on, right? So the requirement in IFRS 16 says include your termination payment if the lessee is reasonably certain to terminate this lease. I don't have information to know whether or not this lease is going to be terminated or not. So I'm going to just put myself a question. Is termination reasonably certain? Right? I've asked myself a question, right? That I expect the examiner is going to answer for me. I just pause certain, right? That I expect the examiner is going to answer for me in the scenario. But what I'm doing is this critical reading, right? It's almost like, and another way I like to think about it is that I'm not going to be a victim to the scenario, right? I want to go in saying, okay, I want to read and think about all the missing pieces and almost try to preempt the information I expect from the examiner to answer my questions, right? And it's again critical. That's critical thinking. You're asking questions. You're engaging with information. Where Danny taught you about all of these skills. So now you're creating an expectation of the information that you're going to read, right? And at the same time, I'm summarizing the information on the side here. So by the time I'm done reading all of this, I'm literally going to have a bunch of comments on this page. And those comments on this page or my scribbles on my page are going to be my information as I own it. When I read the required or when I answer the question, I'm going to look at my information I'd only refer back to the detail if I really, 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 really need to. What's the benefit of all of this? Firstly, I'm actively reading, so I'm not just trying to get to the end. And the second piece is when you get to the required, you're going to be cruising because you know where all the information is and it's not going to slow you down. Okay, so let's continue reading. Shortly after Piper signed the lease contract with Keller, development of a large shopping mall began across the road from the Grudem. It became clear that the Grudem would no longer meet the requirements for Piper's tranquility and peacefulness. As the cancellation fee in the contract with Keller was significant, Piper's board decided that the Piper would continue to make payments for the Grudem while an alternative use for the building was being investigated. In the meantime, the Grudem was vacant. What are we thinking? What information have we been given, and how does that impact our thinking, our questions, and how is that relevant to accounting for this lease? So we signed the lease, property available, shopping mall at the other side of the road, messes up our plans, so we can't develop what we wanted to develop. We can't cancel the lease either because it's so expensive to cancel it. So we're just going to have the lease. We're just going to have this building and essentially do nothing with it. How does that impact how we account for this lease?
So how I understood is the termination now is stating that they're not going to terminate because the cancellation fee is significantly high.
I'm sorry,
So
I'm struggling a little bit to hear you. The last part?
So I'm saying now they're quite certain that they are not going to exercise the termination option because the cancellation fee is significantly high.
Agreed. So now I can go and answer the question that I raised initially, right? So I said, okay, fine. Am I going to cancel this thing? The answer is no. It's expensive. Let me just close this comment here and come back to this one up. Okay, I'll write a separate comment so we can actually see how we're developing as we're going, right? So to answer the question about the future value, no. Exclude the termination penalty because not reasonably certain to exercise that option. Right now, now these are my notes. Now, first thing, the first important piece that's important, right, to flag here is to say, what's my train of thought? Yeah, as a from an exam technique perspective, right? The FV is going to be 0, right? Lease term is going to be 10, payments are going to be 19. But just saying FV 0 and moving on, right? Playing with fire, if we ask for like a calculation or journals. You say FV 0 since not reasonably certain to exercise termination option. Okay, that is good exam technique, right? Because then you're making it clear to your examiner why you're doing what you're doing. Because the key is in the applying the principle, and that is critical thinking. Okay, that could potentially be that critical thinking, potentially be a way to demonstrate that critical thinking to earn you that mark, because you have analyzed certain facts and circumstances, and you realize how that impacts an accounting outcome. Therefore, no future value. 100%. Good thinking. Agree with that. Violet, jump in before I go to the comments.
So this is just an exam technique question because I noticed that obviously with as you reading, you're writing down these notes. I just wanted to know, would you be writing down these notes as you're reading the first time, or when you've actually read the first time, read the required, and now you want to try to answer and see what as you're inspecting the scenario?
Good question. I'll do it when I read the scenario the first time. So so if my approach is read required, then scenario, then back to required. What I personally would do when I read the required the first time, I would just do kind of like how we did it as I read it, like almost like high level. I won't get too much into detail with the planning, but just want to get a sense in terms of what I've been asked, get whatever nuances I can pick up from the required. Then I come to the scenario, I'll do exactly what we're doing here. But I always get the question like, oh, but this is so much time. How are we ever going to finish? When are we going to finish? Yeah, I mean, it's a lot. Why? Because there's how many of us? 40 of us in this class. I'll say maybe like a solid 40% are actually contributing to the conversation, for which I'm very grateful. And I think everyone else is also very grateful in this session. So naturally, there's going to be a lot to be putting down on the page, right? And maybe let's say we're getting 95% of the way in terms of what can potentially be extracted. All I'm going to say is that as an individual, you only need to get to about 60% of these critical thinking points and issues identified for you to set yourself up well, right? So don't be taken aback of the detail we're going through here. It's just a factor of having so many people in the room contributing to one question, right? So there is time to get through it as an individual. And then the second time I go through the required, then I will plan, which I want to dedicate the last 20 to 15 minutes of the session, just planning a required. Okay, cool. And I saw your thumbs up, so I'm guessing I answered your question. Absolutely impairment. So absolutely spot on. So impairment indicator flags all over the place. So we're gonna now, because we've entered into this lease, we have this obligation to make lease payments. We're definitely going to recognize a lease liability, right? Because we need to reflect our liability of what we owe under this lease as Piper. But with the right of use asset, we also going to recognize a right of use asset as the equal and opposite for the lease liability. However, we have very clearly been told here that there are no economic benefits to be had from this particular asset because of this new development, right? So new development equals indicator of impairment, right? So for IAS 36, we need to assess whether or not we believe our asset is impaired. This means identifying a right of use asset, the recoverable amount of the right of use asset, which means estimating its value in use and determining its fair value less cost to sell. Probably for the most part with the lease, it's probably easier or more rational to get a value in use. I think it'll be quite tricky to quite figure out what a fair value of a lease asset is. Because that would involve having to enter into a hypothetical transaction to sell a lease asset, which is quite tricky to do, right? So 100% impairment indicator, IAS 36 gets triggered in here. Some lovely integration coming from the examiner here. It's a good spot. The other thing that's also good to mention is that onerous contract. Okay, so now we've got onerous contract is triggered. Now, one thing that I'm very, 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 very happy about is that onerous contracts are one of those things that are just hard to identify. So in an exam scenario, your examiner is not going to tell you like, hey, onerous contract, you need to account for me. No, they'll just describe a contract that has become onerous. And then the duty is on yourself to identify an onerous contract and either discuss it or account for it. Either way it goes. So with onerous contracts and most provisions, completeness is actually the key risk, i.e. missing a scenario where you need to raise these liabilities simply because you just missed the scenario that prompts you to recognize these items. So 100% massive thumbs up to all of those that identified this fact pattern, like, oh, this is definitely looks, smells, and breathes like an onerous contract, but not relevant for LSC. Why? Why is it not? Why are onerous contracts not relevant for LSC? I'll give you a hint. Onerous contracts try to upfront the liability. So let's say I enter into a contract to sell something, and I'm going to incur a cost to get that thing that I'm selling. And then all of a sudden, I cannot sell this thing anymore, but I can't exit the contract to to buy the thing that I'm supposed to sell, IAS 37 says, okay, I want you to recognize that a liability today, an expense today, even though maybe you may incur the cost in future, but I want you to upfront that obligation so that your users of your financial statements can see upfront that you have this contract, that you're going to have to incur this cost in the future, to which you're not going to be able to generate revenue from. So it's become onerous. So in this particular scenario, and we just discussed it now very briefly in my comment above here, if the objective of onerous contract accounting is to show a liability under a contract upfront, why is it not relevant for lessee accounting anymore?
They already have the liability in.
100%. 100%. So it's not relevant anymore because the lease liability is already there on the statement of financial position. So for previously, yes, it was relevant for lessees because of the previous way that they had to account for it. But now, because the lessee puts that full liability on the statement of financial position anyway, there's no need to recognize a separate onerous contract liability. Okay, but take nothing away from spotting that onerous contract. Okay, so ultimately, I think that's us discussing question number one. Without almost going into much detail, but in the only piece that I'm just thinking about. So coming back to my thing here, we've discussed the lease payments, we've discussed the tenor, we've discussed the feature value. What about I? I'm actually just going to go to the additional information because I think there's more context for us here down here. There we go. So the impact of time value of money is considered material unless otherwise indicated, and 9.5 is an appropriate discount rate. So that's the only discount rate that we have. So coming back to my point up here, for I, what are we going to do with the interest rate? How are we going to figure out what the interest rate is? Yeah, Tanya says the rate implied in the lease needs to be calculated. Yes, that's the first point of call. Can you calculate the rate with the information we've been given?
I think we don't have enough information to calculate the interest rate implied.
100%. So
yeah, so we are going to use the rate that is given. So if we are given the incremental borrowing rate, we would have been using that. But for our case, we're just given the 9.5, which they say the discount rate.
100% completely agreed with your analysis. Thanks for the happiness. And now it's crystal clear. So I don't know what you did in the background there, but we can hear you clearly. So thanks for sorting that out. Cool. So I'm going to put that comment in here. I equals given rate of 9.5% since we cannot calculate the rate implied in the lease, since we do not have the fair value of the Grudem on day one. Okay, again, put that little comment very quickly in your solution if you're asked for a calculation, because that will be where that critical thinking can be demonstrated. So you assessed and etc. and got to that conclusion. So we've essentially discussed the answer to this 16 marks. No, hang on. Which question is it? I think it's this one. No, I think it is this one. Yeah. So yeah, this question A here. We've essentially answered this particular question in terms of what we have discussed. So ultimately, I'm coming back to the point that I was sort of making about critical reading, because I see we only have about 10 to 15 minutes for the next part. So I just want to round this up very quickly. So you can see, using the technique of sort of having a structured approach. So like I said, I like using the PV calculation or the inputs thereof to think in a structured way, think about all of the key elements of calculating for a lease. And also you can see how we approach that skill of critical reading the script, and ensuring we're not just reading for the sake of reading, we're asking questions. Why is this relevant? Why is this irrelevant? What information do I need? Oh, I've got the information. What does it mean now for my thinking? How does that impact, etc., etc., etc. That's how, when we say critical reading, this is exactly what we mean. So not a science, but an art, right? So it looks differently for everyone, but ultimately the objective is what we've been doing. So let's read the next section for the next 15 minutes, see how far we get, and then we'll wrap things up by sort of reading the solution. So now Alcorn. So now, okay, we're getting some more context on this entity called Alcorn. So Alcorn is I'm not sure about you, but I usually struggle with just the names of entities in these exams sometimes. Whenever they put these random names, it's always quite tricky. Alcorn is the only subsidiary of Piper, right? So we're getting context of this group. So now again, right? What's the wrong thing to do? Come here, highlight, cool, I've absorbed, I'm moving on, I'm living my life. Wrong. Why is that wrong? As soon as you have a group structure, just like the timeline, the first thing you need to do is draw out the group, right? Because now we've got three parties to this contract. Sorry, not contract, to this scenario. We've got Piper, which is the parent. We've got Alcorn, that's a subsidiary, and we've got Keller, that's an external party. Now, having these three sort of parties clear in our minds is crucial, because what happens in this part of the scenario partially gave me a headache. Just trying to figure out what's going on, when, how, because now the assets are moving, the leases are moving, new leases are being signed. It was an absolute mess, all right? So if you were like me, and now when reading this, it literally felt like mumbo jumbo stuff. Make sure that you sort of draw out that picture. It really did help me contextualizing what's happening here. So Piper retained control of Alcon throughout financial year 23. So we're just being told that the control was not transitionary, like it was. So Alcon was part of the group, the Piper group, all throughout the year, the current financial period. Piper purchased all of Alcon's 110,000 issued ordinary shares on 1 Jan 2021 for 1.2 million. So here we've got another key date. So this acquisition happened after this lease was signed, right? So in your timeline, you then say, okay, 1st of July, so this is the next financial period after that lease on the top was signed. There was an acquisition that happened for Alcon to become part of the group. Okay, so I'm putting stuff in my timeline so I know when things are happening. This is obviously in a period very prior to the current period. This was considered to be the fair value of Alcon's net identifiable assets at the time, right? So why are they telling us this? No goodwill. Okay. I slowed down there because I was like, should I ask you or what do you all think? But yeah, I just looked at the time, so I was like, it's fine. Let me just give you the answer because we have 10 minutes. So they're telling you that the 1.2 million equaled the net identifiable assets, because they're ultimately trying to tell you that there's no goodwill on this acquisition. Okay, as I was reading this, I was probably thinking, initially I was like, okay, this is business combination accounting, but because it happened in so many years prior, I was like, okay, fine, it's probably not going to be the business combination. So this is probably going to be consolidation procedures. Then I read this and I was like, okay, fine, I'm being told about that there's no goodwill. Okay, cool. So that then scopes out any need for like goodwill impairment. So I don't need to worry about accounting for goodwill, essentially. Okay. So again, so it's that taking it a step further, right? So just how did I analyze the statement, right? I said, this was considered to be the fair value at the time, right? Why is the examiner telling me this? Yeah, what does this mean? What is the implication of the net identifiable assets and the consideration transfer being the same at a given time? Oh, that would mean that if I did my purchase price allocation, I wouldn't end up with any unidentifiable assets, chief of which is goodwill. So then there's no goodwill. Okay, cool. So because there's no goodwill here in this acquisition on this balance sheet, what does that mean for me as a candidate? Okay, I don't need to worry about accounting for goodwill subsequently, which means I need not worry about impairment of goodwill, etc., etc. Even this purchasing all the shares. So what does that mean? It means, like, why is the examiner telling me this? Oh, it means I don't need to worry about NCI. accounting for NCI, because we acquired all of the shares. So again, please, when you're reading, when it comes to critical reading, and again, the question that I love asking is, why is the examiner telling me this? Okay, what does this mean? What conclusions can I draw? What questions do I have? Right? Is a very nice way to think about it, to force yourself to critically read through. And when it comes to practicing this stuff, what I also suggest is, because again, everyone always says like, oh, it takes forever, I can't do all this stuff. You just need to it just needs to be part of your DNA, right? And the only way it's going to be part of your DNA is if you just practice. So if any of the stuff is almost revolutionary to you and you're just like, oh, this is actually a very interesting way to approach reading a scenario that I think I could benefit from, right? That I don't think I've done before. Then what you need to do then is practice. How do you practice? The next accounting question that you do, forget about reading time, right? Maybe it's usually you give yourself 30 minutes of reading, depending on how long the question is. Forget about it. Give yourself an hour and a half to read through the scenario. 2 hours if you must, right? But point is, ensure that you are critically reading through everything. I promise you, when you attempt a question, you'll see that your attempt will be an awesome one. That's a massive improvement. That I can guarantee it. Then you will have experienced the benefit. Then the objective is just to get faster, right? So depending on how long it took you to do the first critical reading, right? Shave off a bit of time the next time you do it. Then shave off a little bit more time. Then shave off a little bit more time until you're now down to kind of like the amount of time that you typically get for reading in an exam. And that's ultimately how I would approach practicing the skill of critical reading and doing it quickly and making sure that's part of your DNA. Okay. So let's read the next little paragraph here. So on the 1st of February 2023, again, back to my timeline, this now happens in the current year. Now I'm very intrigued and interested because this information is going to become crucial, definitely, for the accounting, for the questions. Because if I look back, when we dealt with Alcon at the separates, it was 2023 accounting. When it was at the console level, it was 2023 accounting for the group. So then this is definitely going to be quite important. So the 1st of February 2023, Alcon purchased the Grudem from Keller. And this is when my dizziness started. I was like, okay, fine. What's going on here? So in my picture, I've got Alcon, that's a group entity, purchasing sorry, let me just go back up here again. So Piper is a lessee here. So actually put this on Excel. So it's making me dizzy again. Okay, so we have Piper, who's the parent. And then we've got a sub, Alcon. And then we've got an external property, Keller. Right? Then between these two, we have a lease. Right? Because of the Grudem. Right? Right in the middle here, between Piper and Keller. Piper is a lessee. And Keller is a lessor. Right? So, in the current period, where are we? In the current period, on the 1st of February 2023, Alcon goes and purchases the Grudem from Keller. Right? So, the Grudem now gets moved down here. Right? And you presume, and we're going to read it later, it happens as well, that the lease would then do the same. Right? Will come into the group and become internal. At least that would be the assumption, right? So that's that first shift that started making me dizzy, right? Okay, oh, that's quite hectic. So now my external lease has now become an internal lease. Okay, is at least so far what I would expect to see happen. The sales agreement stipulates the following. So now this is Alcon's purchase of the of the Grudem. So this purchase, and remember we have the context from the required, is going to be relevant from the separate financial statements. right? Because if I think about the required, it's asking me, prepare adjusting journal entries required to correctly account for the GRUDM in the financial statements in this period, right? So this purchase happens in the current financial reporting period, in the separate financial statements. And from the separate financial statements perspective, this is the purchase of PPE or investment property, depending on how we classify this thing. Okay. And it stipulates the following. Okay, now I'm going to ask you all to come and contribute to the conversation. So the payment for that Alcorn is making to Keller for the GRUDM comprised of three components. Firstly, Alcorn is issuing shares to Keller for on the 1st of Feb, each share with a fair value of 140 and incurring transaction costs of 800. Then our 8,000, sorry. Then Alcorn will transfer a vacant piece of land that it owns to Keller, carrying value 1.5 million, fair value 3.2 million on the same day. Then Alcorn will make a cash payment of 2 million in a year's time. Why is the examiner giving us this information? Why is it relevant? Are there any questions you have? Are there any expectations you have from the examiner for information to be given? Let me know.
Can I go?
Yes, of course, Tanya, thanks.
Okay, so the first thing I did is seeing that the required obviously asked for adjusting journals. I searched for the journals in the paper. Okay, so the next page obviously gives us the journals, and then I added little notes there to obviously say the share issue costs, for instance, is it correct that that isn't capitalized? The land being as land and not, yeah, so that is obviously in PPE, but they take it to investment property, so that didn't make sense to me. So they, I just made a comment. But yeah, so I worked on the journal itself to then say, okay, what do I have and what don't I have to account for this? And I highlighted in two colors. So basically in red, saying this is where where I see an error, which I need to fix. And then green is if I'm comfortable with what they're saying.
Cool, cool. Yeah, makes sense. But let me just bring it back a little bit. Just to make very clear, because there's a lot of stuff happening in your exam technique that I think it's just happening automatically for you. But just in case there's anyone that's almost like still trying to think about how to approach these type of scenarios, I'm just going to break down sort of what you're kind of doing sort of in a few steps, and then we'll then take it from there. So first things first. So the first step is using the context from the required is very important, and completely agree with that. Like I did it with the separate piece, Tanya just did it just now with the adjusting journals, right? So Tanya sort of picked up that we're going to need to adjust for a few things, right? Agreed. Now, when providing adjustments or corrections, right? How do I approach doing this, right? And for me, it's a 3-step process. Okay, step 1 is what has been done, right? So Tanya accurately pointed out that we've got journal entries there of what has actually been done, which is typically the case of what an examiner would do. They usually give you journal entries, but sometimes they can describe what has been done. So you have to figure out the journals yourself. Step number 2, what should have been done? Now, because I'm trying to simulate sort of real life here. And of course, now we're discussing this while all of you have had the benefit of having read this required a scenario a couple of times. We all know that there are journal entries coming in this scenario. But in an exam scenario, you wouldn't have known that, right? So point is, I'm trying to make is, it doesn't mean that you need to do the steps in chronological order, right? Discussing these bullets, even though we don't know the journals are coming, would have been covered in step 2, right? It's all part and parcel of critical reading, right? When you're reading something and we're being given facts and circumstances, what we should be doing with those facts and circumstances is thinking about how that impacts accounting principles, i.e. how does it impact our accounting for these facts and circumstances, right? So in discussing the accounting treatment for this bullet here, we'll be doing step 2. And then step number 3 is then say, okay, fine, how am I going to go and provide my adjustments or corrections? So I do this by comparing what has been done, what should have been done, and then the difference will then be what I need to adjust for, right? It's just be in opposites, obviously. Say similar thinking with consolidation journal entries, right? What is the parent done? What is the subsidiary done? What do I need to see at the group level? Therefore, how do I adjust, right? Differences with console, there's just another step. Okay, so this is ultimately how we need to be thinking about adjustments or corrections or correcting particular things that have happened. Now, that said, so what Tanya described is essentially a little bit of all three, right? But I guess for this particular part in our conversation, so before we get to the journal entry, let's just talk a little bit about step 2 with what I've highlighted here, i.e., how would Alcorn account for all of this stuff? What should Alcorn do? What should Alcorn do to account for this acquisition of this investment property / PPE? And the reason why I'm saying investment property / PPE is because I don't know what Alcorn is going to use the property for, right? We don't know what Alcorn will use the property for. Therefore, don't know whether investment property or PPE. Okay, so we don't know at this point, we don't know whether or not it's going to be investment property or PPE. So I guess the first question that I have in my mind is, so what? Does it matter whether it's investment property or PPE? And the second question is, can I get some contribution, please, in terms of how Alcorn will account for this acquisition? Like, how do we account for all of this stuff? Every day against the clock. We've got 10 minutes left. Let's discuss this one piece and then we'll be done. Anyone? We don't know how to account for. Are we just exhausted?
Hi, sorry.
10 more minutes. Hi, Melanie. Thank you.
So I'm sorry, I'm just confused on your question. Do you want to know from us the journal that should have been passed, or what is
So how to account for this? So how do we account for this acquisition of this of the Grudem? Yeah.
Well, if it comes to the issue of the shares, I just took the ordinary shares of 2,500 and times about the fair value at acquisition date of 140. And then initially the transaction costs I was quite confused on. I didn't know if it had to be capitalized to the investment property or PPE. So that one confused me a little bit. It's what to do with the transaction cost in this sense. So that's how I started with ordinary shares.
Right. Yeah. Great. Fantastic. So to take it, sorry, Violet, do you want to go before I sort of wrap it up?
So isn't it we purchasing this Grudem? So I'm gonna obviously recognize this asset. So I'm gonna debit it, and then the rest is like obviously the equities. I'm gonna recognize equity, so it's credit, and then obviously based on the calculation that Melanie did, and then I'm gonna the transfer of the vacant land. Okay. I'm gonna recognize cash. Okay, then I'm stuck with the transfer of the vacant land. I don't know, I have to think about this for a while now.
Okay, sure, no worries. But we're definitely on the right track. We're definitely all on the right track.
Yeah,
Okay,
I think the vacant land. I think the vacant land, how I understood it, we need to take the fair value of 3.2 million as that acquisition date. But then because we're selling land, we need to think about the CGT consequence as well. And then the cash payment of 2 million is only being settled after year end. That caught my attention. So then I immediately thought then there has to be a like time value of money that needs to be taken into account, and then the interest, I think, on that.
Absolutely. They're payable, and I'm just going to say another credit, which would be the PV of 2 million discounted at 9.5%. Okay, now, I 100% agree with all these points. Now, the first thing that I wanted to sort of, that I really wanted to flag and articulate and remind everyone is the importance of being able to understand what everything that we've done here, both from a journal entry perspective, 'cause I think that's the easier bit, right? If you just do a journal or a calculation, where it's like, okay, cool, I pretty much know what we need to do with the journals we need to pass. But what I liked about what sort of how Violet articulated it, and also in terms of saying, okay, firstly, we need to recognize an asset. So debit is what Violet mentioned, and then say we need to recognize equity. I like that sort of Violet was describing the journal entries. Mostly the point on firstly we need to recognize the asset, because a principle that becomes key in all of this, everything that we're discussing here, including how we treat the transaction costs, is realizing that we're sitting in IAS 40 or IAS 16, and the question we're answering here is the initial measurement of PPE, i.e. the cost of the PPE. So how do you account for that? And then all of this are principles that underpin those underlying application of IAS 16/IAS 40, and the principles are exactly the same. So whether this will end up being investment property or PPE is kind of moot, because ultimately the initial measurement of either they're quite similar, except for when you construct them, it can be quite nuanced, but otherwise the requirements are quite similar. Now, with this armed with this knowledge of how this should be accounted for, then it'll be very easy to then come, not easy or easier, to come to this journal entry and then do step number 3, which is now either critique this, or because we know what the required is going to be, past journal entries to correct this particular section, which we do not have time to go over. Yeah, go for it, Violet.
No, sorry.
Oh, okay, no worries. Cool. And then the piece that we're not going to have a chance to talk about, unfortunately, in this particular session is this section that I think would have been quite a nice one to talk about regarding the subsequent use of the gradient. So what I might potentially do, because I've got you again for the next session during the week, so I'm going to spend let's say 15 minutes max talking about this particular section, where we now create this intercompany lease, because I think it's actually quite an important section of this particular question, and I don't want to go over time with you all. So let's just park this particular question for midweek. I'll just take the first 15 minutes. And then before we adjourn our session, I just want to take the last, and I see your hand, Tiniko. Let me just finish up, and then I'll take your question sort of right at the end, if that's okay. And if you can, please just jot a question in the chat. Probably more efficient. Okay, so let's just do a quick planning exercise on part A, and let's also do. Okay, we can't do part B because we'll do that midweek, and let's also just do the discussion piece, and then we'll call it a day. So when it comes to planning, there are 3 things that I'd always like to keep in mind. Now, we all have sort of different approaches or different strategies when it comes to planning required, but I like to always ask myself 3 key questions, and three key elements that I need to make crystal clear that I'm comfortable with before I jump into a question. So the first is the action word. Now, the action word is quite a crucial piece of the required. It's a word that's essentially in bold, and it essentially dictates the extent to which I go into detail, what I do, how I do it. So it's such a powerful word. Now, the first 2 required I just prepare, which is quite a vague action word, which is also at the same time quite self-explanatory, right? It gets much more interesting or fun if the action word is like critically evaluate or discuss or etc. Right? Like what do all those words mean? Or analyze, or whatever the case may be. So prepare is just essentially just do it, right? So it's quite a self-explanatory action word, nothing more to it. So that's the first that I really like to just make sure that I'm crystal clear on. The second thing is what I like calling the what, right? So what is it that I've been asked to do? Now this is where all the meat of the required typically is, and where you need to be very careful with all of the nuances. So in this case, the what is, of course, a journal entry, right? But a journal entry of what? So a lot of things become quite important in my particular fact pattern here, because it's just to account for the Grudem, right? And it's in the separate financials, and it's for financial year 2023. Now, why have I picked all these things to be important as to all the whats? One, it's just the Grudem. The only thing I need journal entries to account for is the Grudem, right? Sorry, journal entry. So no, first thing I need to put here is correct, or rather adjusting journals. Okay. So the Grudem, right? So that limits me to the specific thing that happened. Then the second thing that's important is is in the separate financial statements. That's very important context, but throughout the whole year. Now, that context is important because ultimately what you usually see is you sort of focus on the initial acquisition of the Grudem journal, but forget things that happen after the fact. That's why the timeline becomes quite important. So I'll put here throughout the year. So what are we talking about here? We're talking about that deferred consideration, right? Unwinding that interest on the deferred payment, and then also any deferred tax that we need to also unwind as a result of that also comes into play here, right? Those extra marks that often get forgotten because we're focusing on what is a very clear sort of issue in the fact pattern, and not sort of from an exam technique perspective, right? So the what becomes extremely important. And the last category of things I like to think about are any restrictions, right? So restrictions being things that have been asked clearly not to do, not to consider. Those are the things that I'm going to stay away from like a plague. Why? Because it just wastes my time. There's literally no scenario where you win by discussing stuff that is not required. Why is there simply no scenario? No one's going to feel sorry for you. What's only going to happen is you're going to lose time, okay? And you're not going to get any marks. It's almost a double whammy, worst case outcome for any attempt. So do not do things that you haven't been asked to do. Okay, you're just shooting yourself in the foot like crazy. So what are the things in this particular case? It's dates and narrations, not required, right? And any extra journals, not required. I don't even know where you get information for extra journals. I mean, if the information doesn't permit, then it doesn't permit. So, I mean, let's not try be fancy. Tanya, your point just raised my eye. I know there's a lot of points in the chat here, but yours just sort of was because it's quite short and it's relevant to exactly what I'm saying. No, I mean, yeah, you can do it, but just know that, just make sure that the dates are worth that extra effort to you, right? And if it doesn't take you long, if it's a couple of seconds, then it's fine if it helps. Otherwise, just know that you're doing stuff that's not going to earn you any marks. Or won't earn you 1 mark, right? Because it's usually just like a communication mark that you could potentially get. So that's essentially, and I see we're out of time now. That's essentially the plan, or how the 3 things I make sure that I bear in mind when I do my plan. And then you can take this exact same sort of framework and you can do it with this discussion task. Now, discussion right, means much more detail. So my action word now is discussion. And discussion means it's a discursive question, and I need to add much more detail to what I'm discussing. What am I discussing? The key things that I mentioned and that become quite important is the lease with Keller, right? But specifically in Console, Piper Console financial statements, in the statement of financial position, in financial year 2022. So in the previous periods, right? So those are the what that become quite important. What restrictions do I need to think about? No calculations. And then no calcs. And then no disclosure or comparatives are the two restrictions I need to be thinking about. Okay. And then obviously, I think now if I were to add to my framework, right, because I guess it adapts with the times, I'll probably even add another sort of indicator here just to make sure that I think about the competencies that are now being assessed in this particular format of the exam. Right, so communication obviously always important, but most importantly, Y1, critical thinking. Okay, let me just scan through these questions and then we can adjourn for the day. So in terms of the share issue costs, we recognize people with wrong say should be capitalized. No, you're not wrong at all. And that's why at Nico, I mentioned that it's important that you think about the underlying principles, right, of IAS 16, IAS 40. And if that cost is directly attributable to bringing the asset to a place and condition in which it can be used as intended for by management, then you can sort of capitalize that transaction cost. But if not, if it's more directly attributable to sort of issuing shares, which I think in this particular case, that's potentially the more likely sort of judgment outcome, then that goes directly to equity. Are we able to ask questions regarding the TAT questions, etc., via Viva Engage, perhaps this conversation? I believe so. I think that I'll definitely leave it to the support team. Like I mentioned, I just jumped in support of the IAC team. So I'm not really sort of close to some of the more administrative type approaches to the IAC program. So that. And I don't see anyone from a number in the background in the chat. So that I think, let me just park that one so that I can take it away and answer. And of course, once this session ends, I don't believe you still have access to this chat. So we'll have to come back to you, Precious, sort of after the session. And then Melanie asked, the required state to correctly account for the Gruden, does that not include the fair value adjustment? I'm always a bit confused as to when to stop my journals. Oh, okay, cool. I see. I see your question, and now I see and I'm remembering at what point I probably answered your question, i.e., because we're required to ask for the full financial year, and that is why we need to account for the full financial year. Cool. If it asks for journal entries at the 1st of Feb 23, then only that acquisition journal would be relevant. Cool, good question. And I'm glad I answered that as we went along. Okay, and I'm also hoping that everyone can see a live demonstration here as to the importance of ensuring you're crystal clear with the required, because it could be the difference between wasting your time and just not knowing that you need to do something as well, and therefore losing some of the easier marks. Okay, like I mentioned, I've gone completely over by 5 minutes, which is something that it's not okay. So then let's end our session here. Nyasha, I see your hand is up, but yeah, we've gone completely over, so it's time to adjourn the session. So 2 options. You can either sort of leave your question in the chat before you head out, or you can try and engage with us. Not try, you definitely succeed with engaging with us on Viva Engage. Okay. Cool. Or you can park your question for Tuesday. Thank you so much for the time, everyone. Really, really do appreciate the participation. I think you guys and ladies did make the difference in this session. So awesome work. I really do appreciate it, and it was very enjoyable. So have a fantastic Sunday afternoon further. Have some lunch, reflect, relax, and then we'll meet again on Tuesday evening, I believe it is. But just make sure you check your timetable so you get the correct date. Okay. Cheers, everyone. Thank you so much. Have a good day. And thank you for all the claps and recognition. Really appreciate it. Bye.